Welcome back, dear traders and investors. All three benchmark stock indexes are on a track to finish the month with the strongest gains since 2020. Will November become a record-stunning month for the stock market? To answer the question, we have to digest fresh macroeconomic data released today. The economic indicators will also determine a further trajectory for the US dollar. Let's discuss the details and try to assess market sentiment on the final day of November. A few factors encouraged a rally on Wall Street in the last couple of weeks, such as the sign of easing inflationary pressure, mainly dovish comments by several Fed policymakers, and upbeat quarterly corporate earnings. As a result, the rally in November added another 8.5% to the S&P from a month ago. However, Wall Street closed yesterday with minor losses. The stock indexes were affected by mixed economic data from the United States, which painted a dubious economic picture. Such mixed signals dampened the 100% hope that the Fed's key interest rate had reached its peak. Importantly, the second estimate of the US GDP was much stronger than in the flash estimate. In other words, the US economy turned out to be more resilient to the Fed's high interest rates. In response, the S&P 500 declined overnight from 4,568 to support at 4,546. The broad profile index opened the New York trade with a consolidation at around 4,550. As for corporate profits, leading U.S. car manufacturer General Motors announced its biggest ever stock buyback plan, worth $10 billion in total. Following the news, the company shares leapt by 9.4%. The shares of a cybersecurity company, CrowdStrike, surged by 10.4% following a strong quarterly report. US gaming merchandise retailer GameStop is due to report on its earnings next week. However, its shares have already skyrocketed to 20.5%. Perhaps the glorious Santa Claus rally has begun earlier than usual. The US dollar is not poised to give up, and the greenback clicked into a jeer on the back of a sudden slump in the euro and other rival currencies. The US dollar index, which measures the greenback strength against 6 major currencies, jumped to 103.37. The red-hot economic data did not support the dollar bulls, so the index had to pull back to an intraday corridor between 102.70 and 103.40. The core PCI price index grew by 3.5% in October from a month ago. It's the lowest reading since April 2021. The index came in line with the market expectations and confirmed a decline in consumer inflation. Besides, inflation went down in annual terms, matching the consensus, and the annual rate slipped to 3% in October, the weakest level in 2.5 years. The U.S. labor market has been cooling down, and the number of first-time unemployment claims increased to 218,000 last week. Continuing jobless claims rose by 86,000 to the highest figure since November 2021. Amid the soft US dollar and a rapid rally in oil prices, the Canadian dollar recovered some of its losses, and crude oil rallied by a few percentage points. The loonie has been growing for 2 sessions straight and settled at around the landmark level of 1.3600. Technical indicators of the USD CAD pair are on the seller's side. Today, apart from important US statistics, the economic calendar reminds us about Canada's GDP data, and the reading weakened the loonie and pushed the USD CAD pair up to 1.3620. The intraday Canada also shifted up to 1.3567 and 1.3627 of the second half of the day. The Canadian economy contracted by 0.3% in the third quarter sequentially. It means that high borrowing costs of the Bank of Canada have been taking the toll stronger than expected, and the contraction negated robust economic growth looked early this year. Perhaps such poor metrics could signal the onset of a recession. Under such economic malaise, the Canadian dollar will find it hard to withstand its American counterpart. While the main fiat currency is facing up to the attack of its rival currencies, the number one crypto is trying to enter the consolidation stage, and the intraday Canada between 37,570 and 38,145 got wider due to high volatility, and now Bitcoin is trading with a sharp price swings up and down. The token went down from the crucial level of 38,000, and the rally both in the spot and futures markets was triggered by anticipation of the launch of spot Bitcoin ETFs. Yesterday, the 13th company, Swiss-based asset management giant Panda, joined the line of firms waiting for approval. On the back of the stunning rally, traders closed the long positions on a Bitcoin to the amount of $17.24 million overnight. The flagship crypto opened today with a modest growth, but the token began the New York trade in the red. It even tested the level of $37,600 per token. Our video review is over. Join our conversation, share your opinions, and ask any questions. The right information is the key to success. See you online tomorrow.